Well, hey there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Now, today is Tuesday, March 17th, and my name is Raleigh White, and I'm coming to you live from a beautiful but chilly sunny day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger's going to be covering a range of important topics, beginning with his midday market analysis and his updated stock watch list. And then he's going to continue his discussion on the trading pit and how he builds his trading pit stock watch list. He's then also going to share with us what are those triggers that move a stock from his watch list into an actual market entry. He's also going to talk about why every pit trade must start out as a swing trade, regardless if he day trades it or swing trades it. He's also going to talk about how he determines which options to consider, and he's going to tell us about the bonus trades that he gives us in the trading pit. Now, if you've got any questions during Roger's presentation, please type them in the chat window, and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And remember, folks, that the chat is open to everyone and we have some ground rules. Always be kind and supportive in your post. Please, folks, keep to the topic. No chit chat. Just keep to the topic. No political discussions allowed whatsoever. And once again, remember that we're all here to learn from the education and the information that Roger is going to be sharing, because after all, he's here to give us an edge in the markets and to help us become much more confident and consistent in our trading activities. Now, for those of you that were with us at 8 o'clock this morning Eastern Time for Roger's pre-market must-watch show, you'll note that there were several catalysts on tap that we needed to be aware of. On the tech front, we noted that Uber was coming in up 3% and GLW was down 2%. As far as the health sector was concerned, Lilly was down 1%, but ALGB was up 1%. On the chip front, we noted that Micron was up 4% and Intel was up 1%. On the consumer front, Carnival Cruise Lines and Royal Caribbean were both down 1%. And with regard to airlines were showing some real promise here, with Delta up 5% and American Airlines up 4%. As far as the Fed was concerned, we do have some reports and some things to be aware of. We have housing start information being released today, as well as pending home sales data. And then this afternoon, we have a 20-year bond auction. Now, for those of you that are wondering, why do we care? Why do we focus on these catalysts? What does it mean? Well, from Roger's perspective, he believes that any time that there's information that's either known or will become known during today's trading session, but it's not yet priced into the market, well, that represents a volatility flashpoint. And as a result, if we're considering taking any trades that might be impacted by, let's say, the healthcare sector or chips or things of that nature today, it would be good to know if there's a catalyst that we need to be aware of. Now, as far as Roger's pre-market stock watch list was concerned, we note that there were 14 tickers that he gave us, 7 shorts and 7 longs. And he indicated and shared that in today's market, he was finding it difficult to find quality stocks to put on his watch list, but this is what he has for today. Now that you'll note that EIX, for example, I put an underline on that because Roger said, look, this is a utility stock, and I particularly like it because the utility sector is in a 2-week wealth window, which traditionally shows that there are gains in the utility sector from the 13th of March through the end of the month. And this is one of the reasons why EIX is on his watch list. Now, the other thing I need to share with you folks is that this is a watch list. And from that standpoint, that doesn't mean that these are automatically trades that you should take. What it means is that they are setting up and they have the potential to be a trade that Roger might take. And if one of those or any of these reach that potential, more than likely he will take that trade and share it in the trading pit or in another of his premium alert services. Now, as far as Roger's pre-open thoughts were concerned, we noted that when we signed on this morning that the futures indices were randomly down slightly coming into the open. Once again, fairly random. We also noted that the pull to call ratio was unbalanced and that the puts were in charge. In other words, puts were pretty high, and Roger expects that that's going to turn around as he's looking for greed to enter the market and more people placing calls. But coming into the day, the puts were in charge. He also did note that the VIX, however, was moving lower and it was resting above the 23 level. That's down 2 points from where it was yesterday at the 25 level. He also noted that the sectors remain mixed with defensive stocks still up. Energy, utilities, consumer staples occupying some of the top spots, along with more speculative stocks. So things, that sector rotation is not complete by a long shot. It's just very, very mixed at this point in time. He also shared with us that the SPY, the QQQ, the MAGs, the SMH, the chips were all sideways, moving once again in a range, looking like they're consolidating, stuck solidly between support and resistance. He also noted that for the second straight day that the S&P 500 and the NASDAQ 100 were in bear territory. And what that means is that less than 50% of the stocks in the S&P 500 and the NASDAQ 100 are over the 200-day moving average. And for Roger, once again, that's an indicator, that we are in bear territory there. Now, what did he expect today? He said, look, guys, the big event for this week will be tomorrow on Wednesday, where the Fed is going to be having its formal press release. It's in 2 days of meetings at this point in time, and he doesn't expect the markets to make any significant investments ahead of the release of the information in that press conference. He also said that, look, guys, I'm kind of cautiously optimistic at this point in time. He says, I see some sectors, are bottoming out, and are starting to level. It could come back. He said he likes the fact that crude oil and the VIX were actually a little bit lower here. And he says that's against the backdrop of an escalating war. And he said, it's interesting there that we have stability there, at least for the moment, against the escalation that we're seeing in the Middle East, and that technicals were firming up. But as soon as he said that, he said, guys, I do have to remind you that this market is very news driven. And there could be something that happens in the Middle East. Name a dozen things that could happen that could have a dramatic impact on where the market is. But for the moment, he remains cautiously optimistic about where things are. Now, once again, we have a great group of people joining us here today, and it's always super to have you. And Roger has put together a terrific agenda for today's VIP session. He's going to begin by giving us a midday market analysis and his updated watch list. Then he's going to talk about how he builds his watch list for the trading pit. Because a lot of people are wondering the question, Roger, where do you find these stocks? And then what are the triggers that convert something off the watch list into an actionable trade that he takes? Okay. And you'll find that fascinating because a lot of you ask that question. Is a watch list stock something I can trade? And Roger says, no, it's just setting up. Well, what does that mean, setting up? And he's also going to talk about, why every trick page got to start as a swing trade. Why does Roger look at it and why is it important that any stock selection begins life as a solid swing trade? Then he's going to talk about how he determines which options to consider. And as a bonus, he's going to talk about and as a bonus, he's going to talk about the bonus trades that he gives out in the trading pit, And so we got a bonus, a double bonus. But
Double
anyway,
bonus.
folks, Roger, you love bonuses. So
Yeah.
but folks, if you've got any questions during today's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And remember, guys and gals, the chat is open to everyone and we do have some ground rules. Always be kind and supportive in your posting. Please keep to the topic. No political discussions allowed. Keep your side conversations and chit chat to a minimum because all it does is interfere with what we're trying to do here, which is to focus on the education and the information that Roger is sharing. Because after all, guys, he's here to give us an edge in the markets and to help us all become much more confident and consistent in our trading activities. And with that, let's say hi to the team. Man, Roger, it's good to see you, my friend. I see you got the hoodie on. A little chilly there in Florida.
Ooh, it's what is it right now? It's I think it's like 40. I was just outside. It's 48 degrees. It was 40
Oh,
this morning. I'm not, this is not making me happy at all. I mean, this is not what I signed up for, okay? Let's just put it that way. I protest. I do
I
not like this.
protest.
I protest. I am not a happy camper. I really don't like this at all, one bit. Um so no, this is not good. And my wife, she's gone. She's in San Francisco. Again, she left
Yeah,
me with Rachel. She's like, it's 80 degrees here. It's like 75. It's warmer there than it is in, which is,
in San Francisco. Wow.
yeah,
Okay.
which
Yeah.
is, it's always chilly in San Francisco, even in the
Hmm.
summers, as you know, it's up north. So it's actually the perfect weather for summer, San Francisco. And then in the winter, Los Angeles is really, really nice. Anyhow, they're having a good time. They're not going to be back till Friday, so I'm fending for myself, me and the cats. Uh, you should see that Clyde. He lays next to me on his back, watches TV on his pillow, looks at me. I mean, it's amazing. He's just like half a human, you know? Anyway, happy St. Patrick's Day, everybody.
Absolutely, St. Patrick's Day.
And let's talk a little bit about this market, shall we? This nutty market that's just causing us all to. I'll tell you, this morning, and even now, the market is still positive on the day. We haven't really gone negative. Um, I am starting to see some semblance of recovery, and I want to show you a few things that I've been looking at lately. I think this will help. If you look at if you look at financials, right?
Hmm.
Financials have been going down for quite a while. They've been going down all the way since the beginning of the year, long before this war started. And some of the stocks that I've noticed, like for example, Lemonade, noticed these stocks started going around January. Rocket Lab started going down around January, right? These stocks are very much related to the financial industry, financial self defense and financial. And these stocks, and I didn't really understand why they started going down, but notice something. Most of the financials that started going down with it, they stopped going down. They're now moving sideways. And they've been moving now sideways for about 4 or 5 days. They're not breaking lower anymore. Okay.
Hmm.
That's that's a sign that and I'm going to tell you something right now. The war impacts financials. I think you guys know that without me telling you that. I don't think you need to be, a physicist to figure that one out. Energy and financials are huge. And right now, this is not going down anymore. It's not going down. And as a matter of fact, some of these some of these stocks are starting to move higher. Okay. Lemonade is a financial, it's an insurance company,
It's
but
an
they're starting to
insurance.
move
Yeah.
higher.
Yeah. Yep.
Yeah. Rocket Lab, this is a aerospace defense company, very much impacted by war, obviously. They usually put end to aerospace and defense when there's beginning of a war, and then they start up again because people, they're not going to put money on explorations. They're going to put money on war right now. That's just how it works. These companies, they rely on a lot of money from government grants and funds. I hope you guys understand that. Just like Elon Musk's SpaceX company, similarly. So it's going to be very interesting. But I'm noticing a lot of the stocks that were going down for really no reason at all, and including the financials, have started gaining a little relative strength. Um, Aside from that, if you look at VIX is actually lower today by 2.3%.
Yeah. Isn't that great? Yep.
Yeah, and this I you may not be familiar with that picture. I have that right here. And I usually don't spend so much time. I spend a lot of time in the morning on this, but right now with what's going on in the market, I think it's really important that we look at this. So I want to show you guys this. And again, these are just all the things that I do when you guys are not around. I do. Take a look at this. Look, look, look. Here. See, this is the financials. This is
Financials,
measures
yeah.
momentum. See
Hmm.
how momentum is starting to turn on financials?
Hmm.
And you could see in the 1 year, this is the lowest momentum has gone on financials. Now, momentum has gone lower before, but look at this is a 3 year chart. Okay.
Yeah,
You see that, folks?
that's very strong support right there. Yep.
Yes, it's very strong. And this is measuring momentum. Let's go 5 years. Uncharted territory. Okay. You can see 5 years. I mean, we can go a little lower, but I mean, we've already gone down this. I mean, this this would be like falling down from. This is why I always tell people, always know where you are momentum wise. Are you here or are you here? Yeah, I mean, you can go down a little, but I mean, this is like falling down hard 2 feet from the ground versus 100 stories up. You know what I'm saying?
Yeah,
I mean, yeah, I mean, yeah, we're not at the low, but I mean, do you guys see where I'm trying, the point I'm making here? I think right now this picture is worth more than 1,000 words. That anything
sure.
I could tell you, I think you see exactly what I'm alluding to right here. I think we're getting to the bottom here.
Yeah, and
Uh,
you were saying the same, Roger, about industrials and healthcare,
mm. Would you
along
like me
with
to show you?
financials.
Would
Yeah,
you like me to show you real quick? It'll only
yeah.
take a minute. I think people, folks, do you? I don't have the chat open. I'm just leaving it closed. Good morning, welcome. Salutations. Hello, everybody. But just want to show you this. Um, Here. You could see right now kind of where we're at.
Hmm.
And I'm just pointing to, let me go a little lower since we went lower. Yeah, I mean, we've gone lower. This is 5 years, but I mean, again, it's like falling from your couch
Hmm.
versus falling from the Empire State Building, right?
Hmm.
And what was the last one you mentioned, Raleigh?
Healthcare.
Healthcare?
Yep.
Yeah, let's take a look at that. I'm glad you were there this morning. It was an interesting session
Oh, it was a great session. Yep.
because I think a lot of people need to see perspective right now, you know?
Right. Well, and to understand, quote unquote, why you're cautiously optimistic,
Yes,
and that the
yes.
technicals are firming up, with the caveat that we're still in a news-driven market. But setting
Exactly.
that aside,
Yes. I can't control what's going to come out of Washington, at least at this point in my life. You never know what the future holds. One thing I will promise you, I will never be a politician. I could guarantee you that. Oh, oh.
we'll leave that to Matt.
Yes, definitely. The big talker there. Yeah. All right. You folks understand why I'm saying what I'm saying? And also, if we go to USO, we haven't broken out of this range. We have not broken out of this range. We're getting more negative news, but we're not breaking out of this range. That's called absorption. Price is absorbing the news without going higher. And more importantly, what impact does it have on the stock market? The stock market, remember what I said. I'm not changing this. Uh, I'm not changing this graph. This graph is going to stay here till it happens. But once we get below 20, then we can all breathe easy and say the market has assimilated this war within its economy. And it has not happened yet. And it doesn't usually take very long, a couple of weeks. I mean, it's not going to be forever kind of thing. Even during COVID, we assimilated and we came back within that, within this level. So it will happen. You remember, the market assimilates anything that's known. It's very hard to assimilate something like a war or an act. It's like trying to assimilate an earthquake, you know? You're
Yeah.
not going to be able to assimilate an earthquake into its price. It's just not possible. How do I know a lot of you are not from California, but I grew up in California, and after an earthquake, you have aftershocks. And those aftershocks can be almost as bad as the earthquake, and you don't know when they're going to come, and they just kind of slowly dissipate. But you folks understand where I'm going with this. I just want to make sure everybody understands exactly what I'm saying. Okay, that's volatility index. We're moving in the right direction. What do I not like? Okay, what do I not like? I'll tell you what I don't like. I don't like this. I don't like the fact that the market keeps bouncing off the 50-day, the 8-day. Um, I don't like the fact that this part, let me blow it up for you. I don't like the fact that this part is not here right now. Because remember what I've been saying the last several days, we're bouncing off the 8-day. Every time we get to the 8-day, we get slapped. And right now we're getting slapped. And if you look at my overnight levels here, we're not all the way at the bottom. We're actually doing okay here. We're actually doing okay here. But I'd like to see us get above the 670s. I want to get into the 670s today. 672, 674. This is actually the opposite of what we saw during the night session. Let me show you how interesting this is. Matt, look at this. Look at this. So at night, look at this. We gapped down, right?
Mm-hmm.
And we went straight up, right? Look. We're going gap down, straight up, right? Here's the mark. Here's the opening bell right here. So gap down, straight up to the opening bell, right? And now look at this. After the opening bell, look at this. Gap up, and then coming down. It was a gap down, and we were going up at night, and now we have a gap up, and we're going straight down. I mean, do you see the complete opposite of what happened at night? Gap up and going straight down. So I actually think we're going to find support. We're already in yesterday's range. I think we're going to find support. Market internals are still very, very bullish. We're still over 1100, which means way more stocks are up and maintaining that. Even though with this drop, we're still very, very strong. We still have way too many stocks trading above yesterday's closing price. And Vold is still trading near the highs. And this is the SPY. And we already know how the divergence usually resolves itself in favor of the Vold. And that's a classic divergence. And we just took out the high right there in the Vold. So we have a new high. We have a clear trend in the Vold. So I'm actually slightly bullish, neutral to bullish right now. Okay. All right. Do we have any questions, Raleigh? You'll be happy to know that I did not open up the chat even once.
No, we're good here. Somebody's indicated that Trump is starting to talk. Matt might know that if there's
Matt, is the man talking?
Oh yeah.
Oh yeah. Okay. What is he saying? What's he talking about?
He's kind of just complaining that none of the other countries would send minesweepers for the Strait of Hormuz.
So he's just complaining, basically.
Yeah, but he is meeting with the Prime Minister of Ireland or Foreign Minister of Ireland. Prime Minister.
What's the purpose of the meeting?
St. Patrick's Day.
It's St. Patrick's Day, I think.
Of course. What else? Duh. Is he's not flying to Ireland, is he?
No, they're in the White House.
Oh, that's what I thought. Yeah, he's not gonna right now get a plane. No, they wouldn't let him right now. Okay, all right, all right. Let me give you guys stocks that I'm looking at. So again, I'm not really bearish, and the market sentiment is shifting. And as you saw, momentum levels. Oh! Last thing. I knew I was forgetting something. Here, stock fetcher. The momentum levels. How could I forget? How quick I am to forget. We're still at 55, and as I mentioned yesterday, we came in at 102. That's coming into this morning. Right now we're at 55, but yesterday we were at 544, and the day before we were at 690. And I told you on this day, and I didn't just tell you. I wrote it in a Telegram channel that I believe that this is too much, and we're going to start springing higher. And then here I told you that the next day I'm hoping to see the number go up substantially, or half of this, but we actually got a fifth of that. Okay, really good. And now we only have 55 stocks making 20. it was impossible for me, Raleigh. I was struggling to find shorts today.
Yeah, I know.
I'll show you. I'll show you guys. Look, look. I'm not just going to tell you. I'm going to show you. So look at my 52-week low list. Okay. Sorry, low list. 10 stocks. 200-day moving average. 2 spotty, jaggedy, and it's an ADR. 2 gappy. A little overextended. This one made it on the list. I don't even know what the hell that is. That actually doesn't look bad. That's terrible. That's a little too choppy. Do you see what I'm saying? This is it. These are the only stocks making 52-week lows. All right, how about 20-week lows? Look, 10. How about 50-day lows? 27. It's not a big list. Not a big list, folks. Ooh, Rockwell. I got to add Rockwell on my. That's a nice one right there. That's actually a beauty right there. Let's see. It's getting into that zone right here. I think it's got a little more room. A little more. Now, if it can get past this, ooh, you got clear skies here. Anyways, I digress. But my point is, you could see we don't have a million stocks on our watch list. That's it. That's the entire watch list. 27 stocks. 27 stocks. So there's no momentum to the downside right now. I'm going to repeat this again. If you don't have any stocks making 50-day lows, 90-day lows, 6-month lows, 1-year lows, then what's moving down? What's moving the market down? Nothing. Just stocks ticking. That's very powerful. That's pretty powerful. Right now, that I can't say enough how positive that is, okay? Okay, so let me show you stocks that I'm liking right now, and then we'll get into the educational session. And again, the SPY is choppy right here. Shorts first, AAOI. Now, this is a stock that actually Richie pointed out to me today, and the reason he pointed this out to me today is because he wanted to confirm what I was trying to show you guys. Remember I was talking about how I'm starting to look at a new setup? And what would happen if I bought this breakout, right? I would get out right here when it broke to 15. Well, I'm not the only one. The reason I do this is because institutions typically do the same thing. Remember, the 15-day EMA tracks the 10-day MA. So this is really just stocks that are trading below the 2-week low. And the only thing that didn't happen here is the 8-day didn't cross the 15-day, and that happened only because the downside move happened really fast, which is actually better. And you could see these are all high volume down candles. So he's absolutely right. And I wanted to bring this up to you and show you this, but this is exactly what I was talking about. Okay. This is exactly what I was talking about. When I talked about when we get out of a trade, that could actually end up being a really good reversal trade to the short side because we always exit when we break the 15-day. So if we were long, this is where we would be getting out. Do you understand? Yep. So the theory is if we're getting out here, a lot of funds are getting short here, which actually makes perfect sense. I did not come up with the strategy as a reversal. I just realized that, hey, there's a lot of selling pressure. But then I thought about it. I was like, wait a minute. That's also the place where we sell. I backed into it is what I'm trying to say, which is the best way to find something, because then you're validating it from a completely different perspective. It has to make sense from every perspective, and it does. I like to sell when we're at the 15-day. I guess I'm not the only one. And again, usually you won't find this downside move after going up so fast. So you'll find like 5-6 more days here, which means the 8-day will cross. But it's the same pattern. Okay. All right. Let's continue. ARQT. Nice continuous down move. Started all the way back in December. This is a biotech. Biotechs, folks, listen to me. Biotechs is, you know how I always say diversification is the only free lunch Wall Street will give you? Well, guess what? Biotechs do not, they run to the beat of their own drummer. They don't follow the market up or down. They're one of the few they move together like cryptos do, but they don't jive to the market. So you can actually, if you want to diversify and you find a biotech that's doing something cool, that's a pretty good way to diversify. Just heads up. Not a healthcare, a biotech. Don't go buying Guild and Pfizer and Johnson and Johnson and thinking those are biotechs, okay? I've had that happen before. People are like, "Well, isn't this a biotech?" No. That is a beautiful, beautiful trend. Let's take my jacket off. That is a very, very nice trend. Notice market goes up, market goes down. What does this stock keep doing? It keeps going down. What does it mean? Predictability. It's giving you predictability. Predictability, my friends, is very, very important. How the word predictability and trading do not go together in the same sentence. So if you can get any degree of predictability anywhere, you're doing great. This is predictability. Look at this trend.
Yeah.
See, because let me explain why. From a practical perspective, let's say you're wrong and you enter your short right here. Okay, you're wrong. In 3 days, you've been forgiven. See, do this. When you go and look at a stock that you want to trade, put a random point in the near, like go back a few weeks or a month and just pick a random place and say, how long would it take me to recover from this place? And the answer should be a day or two, maybe 3. If it's more, then it's too choppy. Understand?
Mhm.
I'm telling you this from practical
Yeah,
considerations.
it's a great rule of thumb. It really is.
Yeah. Because and yes, I do break that rule when I see a really nice trend or volume is really high. But generally speaking, if it's just a regular boring stock, and most of them are, that these are very nice moves. That's a very nice move. The odds are this move is going to continue. Now, it's a slow stock. The options are probably crap. I know, but that's just how the balls bounce. Okay? You're never going to have it all. Another one, Vital Farms. Now, before the war broke out, the stock was sloping like this. After the war, it started sloping like this. That's very, very positive for you. I mean, for trading. Again, let's say you get in right here. You're short. Oh, you're already making money here. Let's say you get in here. Oh, you're already making. You see what I mean? The trend saves your butt. This is not. I'm not giving you like advanced trading advice right now. I'm giving you the smartest trading advice anybody will ever give you. Practical advice.
Well, Roger, and
Practical.
you've always said it's not where the price is now, it's how did it get there? That's really
Exactly.
what you're saying over and over again.
Yes.
How did the price get there is more important.
Oh, absolutely. Absolutely. How price moves is very, very important. And then this one, we just found this one together. You and I, we found it together. And this is actually not, this is definitely not a day trading stock. Look how, I mean, it's got a lot of consolidation. It's very unruly. But look, it just broke the 200-day moving average and it's staying there. Look how, I mean, this stock gets slapped around a lot. Now, this stock would do really well with an oscillator, which I don't use. Okay. But this is it's breaking down. Now, this is a stock. If you get into a stock like that, realistically expect if you're wrong, if you don't get in on the perfect entry, expect to be swung around a little bit. You know, it moves almost 14 points a day. I'm not suggesting you trade this stock. I'm just using this as an example. It trades almost $14 per day. Okay. All right, let's look at our longs. Those are the only shorts that I have for you for today. I usually have at least about twice as many. Okay. MSTR. Crypto. Cryptos are starting to break out. Cryptos are starting to move. Okay. Sorry, folks. I'm just checking a few things. Believe it or not, we manage positions live in real time. Palantir. I usually would not buy a stock that's trading below the American flag, but it's got a nice clean breakout right here. And the downslope, the downtrend ended around here, broke the downtrend around here. So this is actually, it's got a double bottom. I like this. Now, my target here would be the 200-day moving average. If it hits the 200, I'm out. I'm saying if you go long, the target would be the 200, and your risk would be right here. Okay, so I'm not taking this trade, but I like this quite a bit. But I would not overstay my welcome here. I would buy it again in a heartbeat after it's here, but I wouldn't stay through this. Okay, that's the 200-day moving average. There's a lot of bag holders there. Okay. It would be a quickie, basically. Okay. That's a very nice setup. Actually, Richie gave me this one. I don't think the options are that great on it, but that's a nice look. Yeah, a little thin, but that's a nice look. And you could see right here, if I put an anchor right there, you could see that yesterday would have been actually the perfect day to, at the end of the day, would have been a perfect day to get in. Ah, excuse me. Allergies. Another one, CC, nice breakout. I don't like the fact that the wick, it's so wicky. I want to see the opposite of this. I want to see a bullish hammer, not a bearish hammer. But the day's not over yet. You can't evaluate a stock. If you're using daily data, you cannot evaluate a stock during the day. You have to evaluate a stock after the market closes. I mean, excuse me, I'm sorry, the last like 15, 20 minutes of the day if you're going to trade, or if you're just analyzing it after the market closes, okay? You could make your assessment in the last 15, 20 minutes because the odds are if it's here, it's not going to go down and drop $10 or whatever it is per day. But I would want to see it taking out the high here if I was planning on getting in on this stuff. eBay. That is a very nice pattern on eBay, my friends. That's a very nice pattern. As a matter of fact, it's already in the gap. That's a nice reversal. That's a nice reversal right there. That's a V, by the way. If you ever hear me talking about a V, that's a nice V reversal, nice bounce. You could see right here that all of the people here are now whole and making money. We're not on the downside. All of these people have recovered. That this is good. Got some support here. I mean, resistance here, but this is looking like a very nice move. Okay. Moderna is coming back. It's holding on to the 8-day. Again, I'd like to see this right here at the end of the day. Remember, these are just stocks that are on my watch list, folks. Okay. Matt, make a note of this, would you? Moderna, thank you. McDonald's. Now, it's a little too early. See that? When price breaks, and not the wick, when this breaks above this level right here, then it'll be ready. See, we don't have to use our eyes. We don't have to gauge. We could just put a anchored VWAP. And by the way, Matt has finished. Am I correct in saying that, Matt? The trading view, quick strike, scanner?
Dashboard.
Is that correct?
Yes.
Make sure you get Cam on that so he knows, okay? Okay. Sorry about that. All right. McDonald's and then Ross Store. Now, there's not a lot of good longs, folks. I'm stretching today. Now, and also, I don't know where these stocks will close. If Ross Store closes right here at the top, that's a very appetizing pattern. See what I mean? I could tell by looking pretty much where this is going to land. I've done this so long, but all of these stocks, that's why they're on my watch list. So what I would be doing right now, I'd be setting anchored VWAP alerts to the last swing high on these stocks and setting my alert right to the VWAP, which you could do right here. Set alert. greater than, let's see, crossing down. We want above price history above the view up. That's what we want. And I'll set it for a week. All right. See that? You could do that on any of your platforms. Every platform allows you to do alerts. All right. That is
There was a question, Roger, that came up
yes.
about Micron. How does Micron look?
Let's take a look see. Ooh, actually, you know what? Micron was on my watch list this morning, actually. I don't know why I didn't put it back on here. It looks fantastic. Sorry for not adding it. It looks great. It really
No
does look
problem.
great.
Okay, great.
I
I'm going
don't
to
know
add
why
that
I
to the
missed it.
list.
My apologies. My
You were
sincere
testing
apologies.
us, Roger. You were testing
I
us.
wish I was. I wish I'll stick to that one. Sounds good to me. Whatever. That's the ticket. Yeah, that's the ticket, right? No, but it actually looks perfect. I might have mentioned it. I missed it. I simply missed it. I am not perfect. I'm very far from it. Here, let's take a look. Oh, and Richie said to take a look at a few things. Cube? No, not yet. No. And no, not yet. Too much chop around this area. No. And I'm just looking at his messages. Nike. Now we're talking. Now this could be a very nice. This I really would love to take a Nike short here. This is nice, Richie. This is really nice. The only thing is, it's up on the day. I'd like to see it get a little weaker. I'm going to add this on my watch list.
On the short side, Roger?
Yes, of course.
Yep.
Yeah, I'm going to add this on my watch list, Richie. And if it gives up the ghost, that may be a really nice short, but it's a little too strong for me right now. Just a hair too strong. It's got a few things that are looking great. Volume is not high, and it's only up 0.40, and it's filling in this gap nicely. I don't like the fact that it's above. If this was down on the day, I would say that's a perfect A line. So the only thing that's stopping it, it's still just a hair up on the day, but that's a very nice look. And you got to, and I know the options for this are very, very liquid.
Yeah, it was also mentioned, by the way, Roger, that Micron's got earnings coming up. And so I know when you look at your screen for your shorts and your longs, earnings is something you take into consideration as you narrow things down. But when it's on
It
the watch
is.
list, it's based on the technicals.
It is. Yeah. See, on Friday, I added it to my watch list, but not today. That's kind of weird. I've been thinking about it all morning, and I've been looking at it, and I'm sorry, folks. I have no excuse. I really have no excuse. And it's not the fact that earnings. I mean, I know some of you watch earnings, some don't, but this is a nice chart. It's a very nice chart. I really like it. I really like how it, and I like how it gapped up and how it's holding this gap from yesterday and how all day it's been above the VWAP. This is a nice look. Yeah, very nice look. Okay. Any other questions?
Nope, that about wraps it up. Good session there, Roger.
Yeah, really good session. And good questions. Good questions. You guys are my eyes and ears. You guys are my eyes and ears. It's good to have people here because sometimes I do miss things. I'm not infallible. I'm a human being. I've got like got gazillion monitors. I'm answering. I'm in chat rooms. I'm
Well,
doing
for
like
those of, we, by the way, I want to welcome all the newbies that are here because a number of people chimed in and said this is their first time. We're delighted to have that. But for those that have been here a while, Roger, you've done a great job of training us exactly how you look at the market. So, when we're not in your morning room or in your VIP session, we're checking out the markets by ourselves, and we're finding these opportunities using some of the tools and analytics that you've shared with us. And I think that's great.
well, I'm very happy to hear that. All right. Thank you, folks. Thank you, Raleigh. I appreciate it. All right, now let's talk about the pit. Yesterday, I started talking about the pit, and I got some emails, and I got some questions, and I want to talk about some of the other things we discussed. Let me just. Let me just get my agenda up here. Here we go. Okay. All right. So let's back up a little bit. How do stocks? What I did is I took I got about 60 to 70 emails, and a lot of these questions were repetitive. So what I did was I put a list of most of them and how to answer about 50 of those questions with these 5 answers. So bear with me, folks. This will help. So how does the stock get on my pit watch list? So, okay. So if you see me in the pit, I give trades. This is a trade right here when I have the 3. This is an official trade, okay? But all day long, I'm like, add Micron to your long watch list, add Dell to your short watch list, and you'll see it right here. Add eBay to your long watch list, okay? Add MSTR to your long watch list. How does a stock get on my watch list, and what is the significance of that watch list? Okay. The stock gets on my watch list all day long. I'm looking at my scanner. I'm looking at my Thinkorswim scanner, which is right here and right here. And I'm looking at my TC2000 scanner, which is right here. And by the way, this scanner is the Pro Trader dashboard. This is the tool that I use. And what I have on TC2000 is exactly the same scanner. It's exactly the same scanner. It's not a different scanner. It's exactly the same. It's got the same code built in. So which if you think it's a different scanner, it's not. So I'm pretty much looking at this, and I'm looking at it all day long. And sometimes I'll find a stock that I really, really like. Now, when I'm looking at my scanner, okay, pretty much what I'm looking at is daily charts. I'm not looking at intraday charts. I'm looking at daily charts. I'm actually looking something like this, or if I'm looking at the Pro Trader dashboard, I'm looking at this, which is exactly the same thing as this, okay? So I'll start looking at my stocks. I'll start scanning my stocks, and I'll start looking at this. And if I see a stock that's making an A-line pattern, if I see a stock that's breaking out, making a 1-year high, a 6-month high, a 3-month high, an A-line pullback, a consolidation, a cross channel, something that has a significant technical edge to us, I will put that stock on an alert, and I will send you that stock. Now, when I send you a watch list alert, that means I really, really, really love how that stock is looking. But it doesn't mean I'm ready to press the button on it and say, okay, let's put a trade in. Okay? So you need to understand, just because a stock ends up on my watch list, which is, here's my watch lists, that's basically a stock that I set an alert on. I want to see something further happen. I want to see a confirmation. Today was actually a perfect example. This stock right here, Rostor. I really like Rostor. And I love how this stock is moving, but I like how it's not really breaking down. And I like how a lot of stocks in its space have already broken down, but this one has not. And I think the stock is starting to turn around, okay? But I don't think the stock is going to be ready for me till this bar is above here. Now, I know you're probably thinking, well, what's the big deal? Well, it is a big deal for me, okay? I need everything to line up. I need it to trade above the VWAP. I need to see higher volume. But now it's on my watch list. So a watch list stock is a stock that's 90% ready to go, but not 100% ready to go. Does that make sense, Raleigh?
It sure does.
Okay. All right. So it means I really like what I'm seeing. You know, let me give you an analogy. You're driving around with your best friend. You had a couple of beers. You're looking to go to a bar. You drive around the area, and you look. It's a bar. There's no line to get in. It's in a safe area. Your friends told you about it a week ago, and they said it was a cool place to hang out in. You see a bunch of guys, gals. It doesn't look odd or weird or anything like that. Nice cars in front of it. There's security there. It's not in a shady area. You decide to go in. That's a watch list right there. That's a watch list. Okay, that means we really like what we're seeing, but we're not sold. We're not yet sold, but we really like what we're seeing. Okay? We really like what we're seeing. Okay. Now, what has to happen for the entry to trigger after a stock hits my watch list? It has to satisfy one or two other conditions, such as volume. I would need to see right now. So right now, I would want to see this price right here in this area right there. Okay. Here, right there. I want to see price right here. Or if I see volume candles, white candles like this stacking right now, that may make me reconsider, although I don't think so. But those would be the only two things that would happen with this particular stock. Every stock is different, and every stock has different conditions. But I'm doing that all day long, and you could see because I'm posting, hey, market's choppy. I'm looking at this. Market's flat. I'm looking at this. Market's not doing anything. Underwater basket weaving session. But that's what I'm doing actively in the pit. Now, I don't need to do that in my other swing trading programs because the other swing trading programs are not as active. They're more longer term. In other words, over 5 days usually. Typically, not always, typically. Whereas pit trades are 12 to 24-hour trades. If we're not out the same day, we're usually out the next morning for a bigger profit. That happens 90% of the time. Just like it happened on WDC, just like how it happened on Dell, and just like how it happened on CF, the last 3 trades that we closed, which we all did really well on, by the way. Okay. Why does every pit trade? Why do I only look at date? Why do I sometimes swing trade, but I'm always day trade, but I'm looking at the daily chart? I'm looking at the daily chart in the pit because sometimes when I initiate a trade, I don't know how much that trade is going to gain or lose that day. And if I like a stock, so let's just stay with Ross Store, okay? Let's say Ross Store goes up to 212 today, okay? If it went up to 212 and started consolidating, I would really like it at that level. I would really, really like it at that level, okay? And then let's say I buy it at 212 and it drops back to 209.28 to this price. So let's say it comes up here, or let's say this morning, for whatever reason, I didn't follow my rules about not buying the first half hour of the day, which would have avoided me from going long here. But actually, you know what? Hold on. No. Let's say I at 210, let's see, 210. Hold on a second. There we go. Okay. So it didn't, I just turned off overnight data. It's not supposed to have overnight data. So you see how the price never came up here when I turned off the overnight data? So it would have to come up here now for me to get the trade off, okay? And since it hasn't come here yet, there's no trade. But let's say that it did. Let's say that the trade came above the 212 area, and now it's right here, back to where it is. Just hypothetically, let's say it did, okay? Well, what would I do? Would I liquidate the trade? No, the trade would have to, for me to negate this trade, remember, I found this trade on a daily chart, right? So for me to negate this trade, the daily chart would have to start looking ugly. Now, for the daily chart to start looking ugly, this stock would have to break the 15-day and close like this, but close right here. Okay, maybe even a little further. In this case, it would have to close because we have this pivot. It would have to close below this pivot. So the stock would have to close or trade in the last, say, 15, 20 minutes of the day. It would have to trade near 205. The stock, let's just say it's 350 right now, and the stock is not doing it. Why in the world would I liquidate it? I would be liquidating a perfectly good trade for no reason. So I would hold this over. So you see, I started, the point I'm making, I'm not explaining to you what my life on Ross Store. What I'm trying to explain to you guys is why, if I'm relying on a daily chart, I'm going to lean on that daily chart, okay, to get me into that trade. I'm going to stay in that trade, and I'm going to get the daily chart to get me out of that trade. Understood? So very, very important. So this is why every stock, every trade in the pit starts out as a swing trade. I want you to show me how many stocks I've day traded in the pit out of 460 or 70 that look ugly on a daily chart. None. Because the only way I would even find that stock would be looking at the daily chart. So most short-term traders are focused, stuck in this world. I'm stuck in this world, which is why my win rate on the pit is so high, because I'm not looking at everything like this. Okay. I'm actually looking at it like this. Okay. So every trade in the pit starts out as, so when people ask me, Roger, can I leave this trade as a swing trade? My answer is, if I didn't like it as a swing trade, I would not have even entered the trade. You understand? I'm a weird guy. I day trade and swing trade using daily charts. Okay. I rely a lot on daily charts. Because daily
Makes
charts have,
sense.
yeah,
Yep.
because they have a lot more data on them than intraday charts. Intraday charts are a lot more noisier. By the way, I like how the market is turning. Are you long, Matt?
That,
Are you long?
yep.
Okay, good. Yeah, I like how we're coming off that bottom there. That looks very good, actually. Okay, so I wanted you to understand how I look at the markets. And by the way, the way I just explained it to you, that's how I always analyze the markets. See, if you're going to look at a daily chart, then why are you liquidating your stock based on the 5-minute chart? Wait till the end of the day and see what the daily chart does. Understand? Very, very, very important. A very important lesson I'm giving you right now. Okay,
And I
so
just, and Roger, I think it's important. I just want to remind everybody, if we rewind back to the beginning, your scanner is essentially looking to identify which stocks are outperforming or underperforming the SPY, which is an indication that that's where the institutions are either accumulating or liquidating.
absolutely. Absolutely. Yeah, at any given time, I'm always looking at the spy and what the spy is doing, and I'm always trying to get in front of the spy. Basically, I'm using these stocks to trade the spy. That's really what I'm doing. All right, very important. Any questions before we move on?
Yeah, there was a couple of questions there, Roger, about how far do you go out on these swing trades?
Well, that's what I'm about to talk about, actually.
Okay, let's
So,
go right into that then. Yep.
yeah, so selecting options. I guess I won't have enough time to take today to talk about the bonus scalps. I'll do that tomorrow.
Okay.
But let's talk about the options. So the options is really, really simple. If you don't know, if you're not 100% sure, just go 4 to 6 weeks out and buy the Delta 70 option. So, for example, here we go about right here, 38, right here. We'd go somewhere around here. There's no volume here, so we would go right here. See 0.70 delta, 0.70 delta right there. 31 days out, there's your option right there. Or you can go 38 days out, but now you're talking 16. There's no liquidity here. Now, would I do this? No, I wouldn't do this. Let me show you what I would do. I would instead go 4 to 8 days out. 4 to 8. In this case, we don't have anything, so we'd go 10 days out. And I would do a debit spread, okay? And I would go to a 0.50 delta, which is right here, closest option to 0.50, 210. And then I would look at the next strike price, which is 212.50. What's 50% of this? It's $1.25. The spread is $2.50. 210 versus 212.50, $2.50. I would take half of that, which is $1.25. Okay. And then I would see what the difference between these two is. Look, 390, 260. It's 40, it's $1.30. $1.30, we can't afford it. It's got to be $1.25. This is too expensive. Okay. So we'd go a little further. How about 390 versus 150? Okay. Well, the spread is $5. What's half of $5? $2.50. What's 390? What's 390 minus 150? It's 240. 240 is more than 225. We can't do that. Excuse me, it's less than 250. Sorry, my math is wrong. It's 240. 240 is less than 250. We can then do that. That's how you do it. See, if you can't do this because it's over 50%. See, this was over 50% of the spread. This is not over 50. Here, let me take a screenshot. We're gonna get another 20 people asking how to do this, Raleigh, and when we're done. So I'm just gonna show you an example again. So look, folks, look. You want no more than 50%. You want to pay no more than 50% of the spread. So 10 days out, delta point, closest option to 0.50. You buy this one, 210, and then you sell the next one if you could do it. So you buy this plus here and sell that, right? How much? 390 is your debit and 260 is your credit. It's $1.50. Well, the spread here is 250. Half of 50% of 250 is $1.25. $1.50 is more than $1.25. It's not a good trade. So let's go ahead and scratch this out and let's do this one. Okay. We pay $390. That's a debit right here. That's a credit right here. Okay. What's the difference between 390 and 150? It's 240, right? 240. Now, 240 better be less than 50% the difference between those spreads. 210, 215. What's the difference between them? It's $5. What's $5 divided in half? 250. 250 is more than 240. It means we're good. Now, a child can do this calculation, right? I just divided two numbers by 50% and added them together. That's all I did. It's not complicated, folks. Not complicated. And that's how I would take every pit trade if I were you and I had a small account. Because what we just did was we turned a $1,900 trade or a $1,600 trade into a $240 trade. $2.40 means $240 because it's 100 shares. See the difference? Don't come crying to me and say it's too expensive. And then if we don't, and usually our trades in the pit last a day to 2 days, 3 days. The 90% of the trades last 24 hours. So you don't need more time than that. Okay. All right. So tomorrow I'll talk about options in more detail. And then I will talk about, and then I'm going to talk about the scalps, the new bonus trades we're doing in the pit when we have time to do them, obviously.
So, Roger, there was a real quick question here from Katie was asking this, and she was looking for a clarification, and some people were asking the same thing. When it came to that debit spread, she was saying, do I have this right? It would be buy to open the 212.50, sell to open the 210 call, or did she have that backwards?
No, she's got it right. You buy the expensive one, you sell the cheap one. Just always, who was it that asked the question?
That was Katie.
Katie, you buy them, you spend money on the expensive one and you sell the cheap one that no one wants. Just remember what I just said. You want the good one and you want to sell the bad one. When you're doing credit spreads, it's the opposite. You sell the good one and you keep the shitty one. You like my explanation, Katie? Oh, God. I got to have a little fun with you guys. All right. So I'm going to show you a presentation of the pit. I believe, I'm not 100% sure, but I believe today may be the last day that you're going to get this discount. We've had a very, very good results. This is the program. Folks, I spend about 75 to 85% of my day in this program. I do a lot of trades here, and I call the pit the bridge between part-time trading and full-time trading. After we launched the pit, something very, very different happened. Dynamics shifted. People started becoming professional traders because they finally understood that it was possible. You will never, ever accomplish a goal till you believe with your heart and soul that it's possible. You understand? But then once you do believe it, you'll never get it out of your blood. So again, understand what I'm saying. It's very, very powerful. Very, very powerful. All right, let me go ahead and switch this over. Let's begin.
Yeah, and I just want to remind folks here that if you are following us on YouTube, we're going to stop the stream to YouTube as we're getting ready to go into a presentation that YouTube does not allow us to do. So if you're there and would like to come and join us, and I urge that you do so, because Roger is going to continue this education and show how he uses it in one of his flagship programs. So come on over from YouTube to the Zoom room. If you're already here in the Zoom room, man, you're in good shape. Nothing for you to do but sit back, relax.